Hello, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tools that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Hopefully y'all are doing well. Say what? Stay centered with auto framing. Auto framing keeps you. What in the AI inside Zoom are they trying to do over here? By adjusting your camera as you move. Let me see what happened with that. It messed up my screen. I turn that back off. I shouldn't have did that. Oh, I gotta try to figure out how to turn that back off. No video auto frame. Okay, there you go. Yep. What's going on, man? How y'all doing, man? I ain't seen y'all in a month of Sundays. How was y'all Thanksgiving? How was y'all Thanksgiving weekend, man? How was y'all Thanksgiving? Not just weekend. How was y'all Thanksgiving? I ain't seen y'all in a month of Sundays, man. What is my chair hitting? My chair was hitting something. Let's see here. Who all in here? I know some people. Mine was muy excelente. And I was supposed to do this at 3:00. So who's still in here? I see some comments from like 2:30 and 3:00 and stuff like that. So who's still in here, man? I see Rhonda just popped up at 5:01. Here to learn and share at 5:05. So I know y'all in here. What's up, Rhonda? So I'm here to learn and share. I saw Yolanda in the Zoom, I think. Yes, Yolanda in the Zoom. Deborah says she ate too much. Deborah said she ate, what did I just hit? Deborah says she ate too much. I ate too much myself. Here learn to share. Yes, I fell asleep. I put it inside the Discord. I said I woke up. I can't remember what time I posted in the Discord, but I posted in Discord. I said, hey, everybody, I just woke up. So we're going to do the chart prep at 5.
Um, what's up, Michelle? How you doing? Man, I had an awesome Thanksgiving, man. And like the time off was very much needed. You know what I'm saying? I did receive a few DMs in the Discord that I ain't gonna hold you. Some of the DMs I got in the Discord over this past week made me want to shut everything down. at the at the at the at the risk of you know ticking people off and driving them away, right? I you know what? Forget it. Forget it. You know, forget it. It reminds me of when my wife was stranded in Jamaica. This is what it reminds me of. I don't know if I ever shared this with y'all, but while my wife was stranded in Jamaica, right? There was a lady who was, she was recording herself. I don't know what she was recording herself for, but the only piece of it that she posted was of other people that was stranded there complaining and going off on the staff, complaining about they was giving them a bag lunch, complaining that they was having to pay for still being at the resort. They was complaining about all of this stuff. Like they were just complaining like there was a natural disaster. These people could have kicked you out of the resort and went home to be with their families like other resorts did, but they chose to stay there and help take care of you. Right? They chose to stay there and help take, but you're mad because you have to keep paying to stay there, and you're mad because they're giving you bag lunches instead of something that you want, right? So I feel like I do a lot. This is how I feel like I do a lot. And I feel like I do a lot for a very, very, very reasonable price. And a lot of times I do a lot for free. Most of the time I do stuff for free. You know what I'm saying? But you still have people that complain when I want time to myself. You know what I'm saying? So and that's why I said it reminds me of this. Like these people are going above and beyond to help them, and they're still complaining. Right. And it's that part of it that I hate. I hate it. You know what I'm saying? And it's because of the fateful few that and, oh my God, it's never the fateful few that DM me. And anytime the fateful few DM me, they be DMing me stuff like, Tim, I really appreciate you. Tim, thanks for all you do. Hey, Tim, I just figured this out. Hey, Tim, remember the other day you was talking about this? Now it makes sense. This is what I get from the faithful few. It's the jokers I don't even know be in my Discord. I'll be like, who is this? And I click on it, and the only Discord we got in common is my Discord. I'm like, okay, so they in the Discord. Like, what? I don't even know you. Oh my God. Oh my God. Let me tell y'all something. Let me tell y'all something. I pray that the good Lord bless you with long enough life to reach retirement. And the reason why I say that is because once you reach the point where you're retired and all of your time belongs to you, that time becomes so valuable, and you will see the infringement that you are really placing upon me. You will see. I pray that the good Lord blesses you with enough life to reach retirement, just so that you can see how valuable your time really is. When you don't have to do anything and you can just do stuff at your will, oh my goodness. When you don't have to ask permission to take a day off so that you can spend time with your family, oh my goodness. I be telling people, man, marriage and fatherhood is a close second to retirement. Oh my God. Everybody know I love my kids. Everybody know I love my wife. But when the good Lord blessed me with retirement, oh, he know what he was doing. Cheese and rice, he know what he was doing. Whew. Mm, mm. He looked at me and said, come on in, thy good and faithful servant. Come bask in this right here. I call this retirement. Lord have mercy. Boy, look at him. Think about anything that you love more. If you a foodie, if you have, I was just typing that they do not represent. Yes. Y'all, man, I tell you, boy. I tell you, but y'all see, y'all good people, right? And it's probably some of them in here sitting in the background right now going, because hit dog gonna holler, right? They ain't gonna type nothing in here, right? They ain't gonna type. Hold on, that's my son. Yeah. All right. Um, I'm done with that. I'm done with that. We back, man. We back. Hope y'all had a good holiday. I had a fantabulous holiday. I got a chance to see my niece's father. I hadn't seen him since probably '02 when my daddy passed away. If I saw him in '02 when my daddy passed away, that's the last time I saw him. If I didn't see him in '02, the last time I saw him was in 93, 1993, when I had came home for Christmas Exodus when I first went into the military. So it was good to see him. He brought his cousin with him. I hadn't seen his cousin since it been at least 30 years since I seen his cousin. It's been at least 30 years since I seen his cousin. Good time with him. We had a ball for Thanksgiving. My sister put together all these games. She always putting together games and stuff when they be competitive, because all the adults, we put in money. All the adults put in money, and there's a potential to win money with the games. There's also a potential to get stupid prizes like candy or nothing at all, or you know what I'm saying? But it's super competitive because it's a chance of winning some money on. You know what I'm saying? And so, and like me, whenever I win the money at the events, I always give it to one of the kids. And typically I start out with my niece, because her birthday is on the same day as Calandra's, and it usually fall around Thanksgiving. It's my great niece, right? My niece also, her birthday, my niece, which is my great niece mama, her birthday is on, let me give y'all the birthdays. So November the 8th, my oldest daughter's birthday. November the 22nd, that's Dirty birthday. That's my brother's birthday that passed away, right? November the 26th, that's my niece's birthday, right? November the 29th, that's my niece's daughter, which is my great niece, Calandra, and my nephew, which is my sister. So my sister's daughter, Erica, and her son, DeAndre. Erica's daughter was born on Calandra's birthday, and DeAndre's son was born on Calandra's birthday, right? So got a bunch of birthdays right there toward the end of November. Then December 4th, my sister, who got my niece and my nephew and all them with them birthdays, her birthday is December the 4th. Then my mama birthday is December the 8th, right? And then on top of all them birthdays, we got Thanksgiving and Christmas. So this time of year, man, I be needing to bounce back. I be needing to bounce back this time of year. This time of year, it be deep in the pocket this time of the year. So, but yes, expensive on not just the holidays, with all them birthdays right there, right? So I won $50 unrolling, like they call it crate paper. It's like a little roll, and we was unrolling. They call it crate paper. So I won $50 doing that, right? And they so they and I was trying to record me, but somebody knocked my phone down when it got toward the end. Right toward the end, somebody knocked the phone down, and then so I won $50 there, and then I gave it to my niece. I'll probably say through that. That's us rolling. We rolling the crate paper. We rolling the crate paper on there. You got to unroll it. And then I end up winning. Like people going crazy. That's my brother-in-law right there. That's my ex-brother-in-law. That's my Erica daddy with the bald head. Y'all see my wife over there struggling. And then you see, I was screaming, give me my money when I won. When I won, I was screaming, give me my money. When I jumped up and moved around, I had, oh, that's my video there. Yeah, I was I'm recording my victory. But when they knocked it down, you can hear me screaming, give me my money. When I win, uh-oh. Watch when I win. When I win, let me get to when I win. I said, give me my money, right? So I won the 50, and then Christopher. Let me see. Let me find Christopher with Chris. Let me see. I can put this one in the what's name. What Chris at? Chris won 100. I won 10 playing. I won 50 doing that, and then okay, let me put this one in Disco so I can put it on the screen. I'll put this. I'm gonna hopefully let me put it in there. Hopefully let me put it in there. If it let me put it in the main chat. Hopefully let me put it in the disc. Okay. It got the little poop emoji. It's got the poop emoji. Oh, there it is. Yeah, and let me put it in there. Right. So let me put that one in there. So this for here, right? I won $10 on this game here. And I gave it to Chris. And then they had that on the clip, but it's in a long clip. It's in the long clip, and I ain't gonna play the long clip. Well, I can't share the long clip inside there. But this the clip when Chris won. This the clip when Chris won. Can y'all hear? Now see, he pointing at the wrong cup. We thought that was the cup with the 100 under it. And then he rolled it. And then he landed 12. He landed 12. We thought 16. What happened? Why did it stop? What in the world happened? What just happened? Oh! Number 12. Why is it not playing? What is it doing? Oh, they pissed me off now. Oh my God. They don't want me to share. Oh, that's what he won 100. Yeah. So okay. You can take that one. That's it. That's when he won the $100. So now now dig it now. While we in there, my first roll, I won $10. And I gave the 50 to Symphony, my great niece, because her birthday the same day Calandra's. Right. I like, he go, niece, as my tradition, whenever I win money at Thanksgiving, you know, say he go, gave her the 50. So then I won 10. And I said, where my youngest at? And I gave Chris the 10. This joker turned around and win the 100. He turned around and win the 100. Because last year we had adult games and kid games. So the kids had money they could win and the adults had, but this year everybody was competing together because it wasn't no small kids there. Everybody that was there, Chris, I think Chris might have been the youngest and he's 16. I think he might have been in there. So it was like, so everybody competed together this year. And he won. So I won $60 on the night and went home broke. And Sim left with 50 and Chris left with 110. So, and I think Calandra won $10, $5 or $10. And my sister-in-law, Keita, won 20. And then she got 2 scratch-offs. It was 2 scratch-offs in there. And one of the scratch-offs was like, it paid out like $30 or something like that. You know what I'm saying? And so, but we had a good time. And that's my mom in the corner right there cheering for her grandbaby right there. That's my mama right there in the corner for y'all. They ain't never. And then that's my mama's sister. That's my mama baby sister there. But all of them got the same face. The baby sister just dark skin, but they all got the same face. But that's mama right there in the corner for everybody that be saying, "Hey, mama," that's over there cheering for her grandbaby winning $100. But we had a really good. Oh Lord, I see some DMs. I'm gonna close that. I ain't gonna read them DMs. If that's somebody saying something good to me in the DMs, I appreciate you, but I ain't reading that them DMs I see until tomorrow. Because I don't want to get pissed off right now. Hey man, I appreciate y'all for hanging out and listening to my story time about me and my family. You know what I'm saying? I look at y'all as family, so I bring y'all behind the curtain sometime and share my experiences. Hopefully, y'all had, you know what I'm saying, a great time too. Now let's go ahead and get into the chart prep. Tomorrow starts tonight really at 6 o'clock starts a new month. We're starting a new month. If we look over here at the month here, tomorrow is December the 1st. All right. So the first trading day of December. All right. The month of November is done. Right. So let us look at the month of November. Let's go to a monthly chart. So the month of November, y'all let me know based off of what we looked at seasonality wise for the Qs, right? Did the month of November follow the majority side of the seasonality? Right? Y'all put your, if for those that remember, put your answer in the chat. Yes, no. Did it follow the majority of the seasonality percentage? Right? There's the Qs there's the month of November for the Qs. Did it follow the majority of the seasonality? Hello, this thing on? Check. Check. I don't see nothing in no chats. I don't see nothing in the Zoom chat or the YouTube chat.
I'm sorry, Tim. I'm trying to do something. What'd you say? I apologize. What'd you say?
I say, did November, based off what we looked at for seasonality for the Qs, did November follow the majority percentage for seasonality wise for the Qs? Here's the Qs here. Here's November. Did it follow the majority percentage wise? What we looked at as far as what seasonality is for November over the past, we went 20 years, 10 years, 15 years, 5 years. We went back and we looked at it. We said, this is what the percentage of times it closes like this. This is the expected average return based off all this. Did November follow the majority seasonality percent wise this year? Yes or no? That's what I'm asking. I see a yes in the chat. Yes. I got a no in the chat. I got a verbal no and a verbal yes. No. Right. So I got a verbal no, a no in the chat, a verbal yes, a seasonality no in the chat. So there's no, one yes. Anybody else not sure what this? We got a not sure. Right. Get off the fence. Here to learn and share. Commit to something. Callio with the no. Right. Jay said yes. Expectations for November to close flat was correct. from the seasonality for the seasonality of November. Now, I don't remember ever looking at a seasonality expectation to be flat for November for the season that we looked at. I ain't saying what you think that it should be. What did, when we go look at the historical data, what did it say? I did not see it. Yes, we got, so we got 3 yeses, and I done lost count. Right. I don't care what you say, Deborah. What did we say the seasonality was when we went and looked it up? All right, let's go look it up again. All right, so the Qs for the past 5 years, right? 80% of the time is going to close higher than it opened. And over the last 5 years, there's a 4.4% gain on average. So JT, South Miami, that's what I'm saying. We ain't never seen nothing that said flat based off the historical data, right? So over the last, so basically just off of that right there, right? The no's are correct. That's what because based off the historical data, right? For our seasonality, we watched to see of, what was it, September? Oh no, August. We watched August, September, October, and now November, right? We've been watching the months ever since August. We went in August, then we started watching the seasonality in August because we was talking about time and price on like just a higher time frame. I think we started in August. That was August, right? That was August. What? I can't ask Michelle. Michelle been playing hooky. Yolanda, that was August, right? Yolanda be here faithfully. That was August, right? When we started looking
Yes,
at
we
the
started looking at
seasonality.
it in August. Yes.
Yeah. Okay. So we're looking at how is it playing out, as for, are we leaning toward the majority or the natural seasonality, if you will, or are we an outlier? You know what I'm saying? Meaning we're going against the majority throughout the year. So we've been, August played right around that flat, right? And then after that, September was an outlier because I think September was bullish. October, I think October played into the seasonality, and then now November is an outlier. So we had inline, outlier, inline, and now outlier. It's been back and forth, back and forth. That's what's been going on this year. Right, Tim, how is this helpful? I don't freaking know. We just looking at seasonality. If you use like the seasonality charts, this helps you help you in your analysis, right? So if you say, okay, we're going into a bearish season, now I'm going to be watching to see if price gives me bearish signatures. If price is not giving me bearish signatures, right, then I'm going to trust what I see. I'm going to trade what I see. I'm not going to marry this bearish bias, right? I'm going to trust what I see, right? But I'm going to be cautious because the overall seasonality says this, but this is what price is doing. So I may want to just take base hits going bullish because I'm in a bearish season, but I'm going to trust what the signatures are showing me, right? And then if it's a bullish seasonality and it's giving you bullish signatures, now you can say, okay, I can lean more heavily into this bullish seasonality because it's giving me bullish signatures, right? Right? It's giving me bullish signatures. And so now we're going into December, and December has a 75% chance over the last 5 years of closing higher than it opens. On average, over the last 5 years, it's pretty much closing flat, right? So if it closes, 75% chance of closing higher than it opens, right? that means you're looking more toward possibly being more bullish in December because it's a 75% chance of it closing higher than it opened, right? Over the last 5 years, it's been basically flat. Okay. So there's a chance that it may rally, but have a strong pullback, right? This is how you can use this information, right? You can stretch it out and look at over. You see, as we go out to 20 years, it's still the chance of closing higher goes down a lot, but it's still all the way through the whole time. You can do is you can see is on average is closing flat, right? It's closing flat on active average return. That's just your average return over 20 years, average return over 10 years, average return over 15 years, over 5 years, right? So you can expect a strong rally with a strong pullback, or it can be close positive and be in the 75%, but close with a large return and be an outlier as far as the average return, right? They'd be an outlier as far as the average return, because this is just based off average. Because we look at the last 5 years and we go back to 2021, right? It closed with 1.2% up. See what I'm saying? It closed you close up 1%. 2022, it closed down 9%. That's extreme. You see what I'm saying? That's an extreme difference. So it's skewing that average. Okay. 2023, it closed up almost 6%. Okay. 2024, it was flat. 2025, we ain't got there yet. Right. So it's like these extreme swings, it's skewing that average. Okay. So, and now, how can this be useful? Okay. Going into December, right? What has price done coming into December? All right. So, right now, where were we in price? Right. Let's go back to our NQ chart. Right. What did we do? Okay. What did we talk about on the monthly time frame? Remember what we said? We came down, right? On the monthly time frame, we came down. We were watching, right? We was watching to see if we would create a BISI, right? Because we closed October with the possibility of creating a BISI that big. All right. We came in November, we came down and traded overlapping the September candle, eliminate the possibility to create a BISI. So now, what does that? What's the first thing that this has us looking for right now? Just based off of that right there, that we came down and traded into the price range of the September candle. What is that telling us to look for right now? Going forward, what are we looking for right now because of that? Anybody? Chat.
We're looking for price. We're looking for price to expand or either consolidate.
Don't overthink it. Because it traded down into that candle now, we're looking to see if what? We're looking to see
if that can be an immediate rebalance.
If that's going to be an immediate rebalance, exactly. Anytime you're moving bullishly or bearishly, it don't matter. We're talking about bullish in this case, just reversing your mind. Anytime you're moving bullish and you close with a possibility to create a BISI, when that next candle trades down and overlaps the price of that first candle, 1, 2, right? That second candle, that's expansion candle. This third candle, right, should give you a BISI. But if that third candle does not, and it trades down into the range of that first candle, then you're immediately watching to see if this is an immediate rebalance. Why? Because you're going up. And when you're going up, and price stops and doesn't allow you to create an imbalance, right? You're looking for that to be a very strong signature that propels price upwards on the next candle. At the latest, 2 candles over for me. But you want to see that next candle getting up out of there, right? You don't want to see that next candle continuing in the downward move, right? Because that immediate rebalance is a very strong signature when price has swept liquidity, repriced imbalances. It's done all it need to do on the downside, and now it's just eliminating a chance of leaving an inefficiency below it because it's ready to keep going. All right, so you're watching one for that. Is that going to be an immediate rebalance? You're watching that December candle. So this being an immediate rebalance, what does that play into? That plays into December closing higher than it opened. Why do you say that, Tim? Because if we want this to be an immediate rebalance, we want to see December go up. And if December goes up, that plays into the narrative of that 75% of it closing higher than it opens. Okay. Okay. Now, we came down on the monthly time frame. Let me go ahead and move my monthly high and low. All right. All right. We came down on the monthly time frame, our monthly high and low. And I'm going to copy this. I'm going to go ahead and copy this and put this on this discount wick there. Going to hide this. Update my chart while I leave that wick there. I'm just going to highlight because this wick went lower than that wick. So that's why I'm highlighting this one. And this wick is higher than that wick. So I'm just leaving that wick there. Go ahead and hide that because I don't want all them wicks showing later. Let me rename this to November. Rename these to November. All right. Okay, now I can hide that. But I don't want that to be at the top. I'm going to put, I guess I could leave that there. I'll leave that there. All right. Okay, so on the monthly time frame, we've come down and we've swept out sell side liquidity. We've taken out the monthly low from October, right? And we closed, right? This right here is a down close candle, but this is a bullish candle, right? That is a bullish candle. If we look at the range of November, right? We've closed up here in the premium of the month, right? Anything below here, anything closing below here, that would be a bearish candle, right? That would be a bearish candle. This is a down close candle, but that's a bullish candle. We're closing up here in the upper quadrant, right? Right there, just below the upper quadrant of the entire range, right? So that's a very bullish candle. Okay, just as far as candle sentiment, when you look at candles and be like, hey, what's the sentiment of that candle? That candle has bullish sentiment. Okay, we've come down and we have manipulated lows, right? Strong rejection off of the sell side liquidity resting below the October low. All right, on the weekly time frame, okay, we said that we had come down into, right, a weekly order block right there, right? We traded down, fell just shy of mean threshold of this bullish order block on the weekly right there. All right, so we came down for that weekly bullish order block. We traded down into it. right? On the weekly time frame, we swept out liquidity. Remember, we said we came down and swept out some a monthly low on October, right? This was the October low right here, I think. That was the October low. And then, no, this was the October low right there. I'm sorry. This right here was the October low right there, right? That's a swing low on the weekly time frame right there. All right. See, 1, 2, 3, right? We got a swing low on the weekly time frame, swept out that liquidity, right? Came up right here. See where we closed? Can you see where we closed at? We closed respecting that. Is there a space there? No space. No space. Okay. Right. That bullish fair value gap right there. We closed respecting that bullish fair value gap. We had all this stuff marked out before. I don't know if I still got it on here. This is stuff we looked at in the past. All right. Came down. So we came down. We swept liquidity. Right. We swept liquidity here. We traded into an order bullish order block, and we closed, right, respecting the discount PD array, right? That's our lowest imbalance right there inside this range going up, right? This is our lowest imbalance inside this range going up, right? And we close respecting it. Then the next week we open up, right? Fail to even come down below that close, right? And we rally all the way up, taking out that weekly high. Okay. Now, over here, right? There's no imbalances over here. The only thing we got over here is a weekly wick. This is the only imbalance in this here. So there's no fair value gaps being created on this retracement down, right? There's no imbalances being created, right? So that's a telltale sign, right? That's a telltale sign when you see the algorithm unwilling to create imbalances, right? That's a telltale sign that, hey, this bearishness or bullishness may not be as strong as I anticipate, right? Those are signatures that you're watching. Here we go here. When we closed here with the opportunity to create a SIBI, we traded back up into the range of that, watching to see if that's an immediate rebalance because we're coming down. The next candle, that next weekly candle, we came down and took out the sell side and traded into the discount PD rate. So that was an immediate rebalance that took us down to an anticipatory reactionary point. We came down into the discount of our range, right? Came down into the discount of our range. All right. We also talked about this area here of talk about this area of being, you can look at OTE, right? We talked about this area of being able to look at an OTE. We got this area here of accumulation, right? Then we expand up there, leaving, coming back down into an OTE range. We talked about that. We've come back down to an OTE range based off of this expansion up there, right? So you have these different bullish factors, bullish signatures that you're watching here, right? If you trade OTE, you're already in right there, right? If you trade OTE, it already has come to your point and you're already in the move as far as bullishness, right? You're already in, right? If you trade off of order blocks, you're already in. If you trade off fair value gaps, you're already in, right? If you've been watching this, right, you're already in and you're trusting price to go back up higher right now. But coming into it fresh, right, this is what price has been showing us. Price has been giving us, it was giving us bearish signatures, and we was watching the bearishness. We was looking at us to complete these market maker sell models that we talked about, right? Once we completed the market maker sell model, then we start watching to see, hey, are we gonna, you know what I'm saying, start to go back up? That's what we've been watching, right? We said the daily had a bearish break in market structure. The weekly and the monthly has not. The weekly and the monthly only had retracements. This right here, as Michael teaches, is not a break in market structure on the weekly. That swing low is resting inside of an imbalance. So that's not a market structure shift. Just coming down, sweeping that liquidity. Your market structure shift for the weekly will be below here, right? Because this is the structure that's supporting price right now, right? All we did was sweep liquidity there. All right. So on the weekly time frame, we've come down, like we said, on the monthly and swept sell side liquidity, traded down into discount PD arrays. And now we're seeing what? What do we call that? What do we call what we're seeing here at these discount PD arrays? This little bounce back up there. What do we call that? 2 words.
Anticipatory reaction.
2 words.
2 words. Swept liquidity.
Oh my goodness. If you don't get off my live stream, get off my live stream. First word start with a D. Second word starts with an S. What do you want to see when it comes down to a bullish PD array? You want to see what? Phone a friend. Ticks to riches, no Zoom link. You might be a crank yanker. I'm never sharing a Zoom link on a public platform ever again. Too many disrespectful people pulling up, doing all kind of pornographic stuff. My base is married females and females in general. Discount sensitivity, very good. Females in general. And I don't want nobody coming here showing they meat products anymore. So thank the crank yankers. There will never be a public link shared again. Discount sensitivity. Thank you, Tyreek. Say what? All right. So we see discount sensitivity here, right? We're seeing that discount sensitivity. That's a bullish signature. Okay. Bullish signature. So what is that leaning to? What is this discount sensitivity going into? Okay. Our Rick. Okay, Rick. Demand and supply. Okay, if that's how you call it. If that's how you call it, I don't do supply and demand. I only do ICT concepts, right? So we seeing that discount sensitivity right there. Okay, that discount sensitivity is playing into what? Right? What do we just go look at for the cues? Right? That discount sensitivity is playing into what? December doing what? December closing what?
Higher than November. Closing higher than it opened.
Yes, exactly. Playing it to 75% chance over the last 5 years, right? From 2021 to now, 75% chance of it closing higher than it opened, right? That's playing into it. Does that guarantee it? No, but you watch the signatures, right? People always ask me, Tim, how do you see it in real time? Tim, this is how I see it in real time. I say, if price does this, then it should do that, right? So now, if price does this, it should do that. So we came down here, we saw discount sensitivity, and we're rallying back up, right? Like looking at price here, right? Tell me what the algorithm left in its wake over here. What did it leave in its wake over there that should stop price from getting right there, right? Yeah, discount sensitivity or premium sensitivity. That's what Michael teaches as the reaction or the rejection at a discount PD array or a premium PD array. So when you come down right here, this is a bullish order block that's in the discount of this move. Okay. So what's the discount of the move? The highest high down to the lowest low of that range, right? If you cut it in half at 50%, anything below 50% is in a discount. Anything above 50% is in a premium, right? This fair value gap right there and this order block right there are in the discount of this move. So when price comes back to a discount in a bullish scenario, you want to see discount sensitivity, meaning you're coming into a discount, coming into a bullish PD array, and you want to see price rejected. It's just another way of looking at a rejection, right? This is a good rejection. This is not a bad rejection. That's why okay, discount sensitivity makes sense to me. It's coming down and it's showing a sensitivity to price in the discount. It's not showing a willingness to keep going down. It's like it came down and touched something hot. It was like, ow. Ow. It got up off of there. Ow. It touched something hot. It was very sensitive down there. Okay. So you hit them discount PD arrays and it moved up. All right. Somebody said it left relative equal lows to the left. I said, what did it leave in the way of stopping it from getting up here?
An inversion gap.
There you go. Inversion fair value gap. Okay. Go hit us with the double barrel shotgun. All right. Yolanda came on and said, an inversion gap.
That was an accident. Missy Elliott video, huh?
An inversion. Let me get an inversion. Let's with the double barrel shotgun. Okay. Glad you ain't had no bookers. Yeah, so we got an inversion fair value gap here, right? This BISI, right? This BISI was the first imbalance that was created when we expanded here, right? Swept liquidity and then came down and got this change in the state of delivery right there. So this right here, if price is bearish, right? This is a inversion fair value gap, high probability inversion fair value gap, right? What else did it leave in the wake, right? What else did it leave? We got the inversion fair value gap, right? What else did it leave? One more thing. We're not even going to look at the bearish order block right here because we got the inversion fair value gap. What else did it leave over here? Very interesting. I use ICT concepts for my analysis, so I definitely look into understanding. That's the void is inside the inversion fair value gap, Michelle. The market just opened. Right. So now that the market just opened for the Qs to play out, well, for the NQ to play, because the Qs ain't open yet, but for the NQ to play out for that 75% chance, we need December to close higher than 25,482.5. Right. That's the opening price for December. So if we close higher than 24,482.5, then the NQ is playing into that 75% for December. All right. What do we have now? Y'all come on. Y'all move too slow.
We also have that premium wick.
Yes, that premium wick right there for the 10th, the week of the 10th. Do I still have that over here? No, I don't. No, I don't. Right. So we got this premium wick right here. So this is what the algorithm left in its wake to stop price from getting back to them highs. Right. Tim, how is that helpful? Okay. Now, when you're looking at PD arrays, right, you want to allow for every PD array to do its job. right? And when you're looking at PD arrays to do its job, you want to understand, is his job in line with the narrative? Okay. Hopefully that blender back there ain't too loud. My son making a smoothie or something. What that? Sing. One of y'all shut my door. Sing. Sing. Timothy. Hey. Sing. Junior. Hey. One of y'all shut my door. I'm in a screaming. Y'all can't hear me?
Well, no, blender. My bad. I heard you towards the end. I was like, "You screaming?"
Yes, I was. I could hear the blender. Blender drive me crazy. I can't even think. Got me yelling because I can't hardly hear. Anyway, now when you're looking at PD arrays, you want to allow the PD arrays to do their job. You want to know, is their job in line with the narrative? Okay. So if you're anticipating them to do their job and they're in line with the narrative, right, you have your target outlined for you. Okay. What do I mean by that? The weekly and the monthly are in a buy program. The weekly and the monthly are bullish. Okay. We come down on the monthly, right? On the monthly time frame here. All right. We come here on the monthly time frame. We're consolidating here. All right. We come down, we sweep, come back above there. All right. So if we consolidate in here, come down, sweep, what do we anticipate? Consolidation, expansion, reversal, retracement, delivery. That's what we're expecting in the sense of price delivery. Okay. So we're looking at how far of a retracement are we anticipating? Okay. If we look here, right, this right here, we're offering buy side and sell side delivery, and then we leave it right here. So right here, this is a balanced price range. Okay. So now, since this is a balanced price range, all right, we're not going to come and anchor our range all the way down to here at that low, right? We want to look at when we leave the balanced price range. Okay. When we look over here, we do not have a bullish order block anywhere inside here. All right. No bullish order block over here at all. It's just consecutive up close candles, right? This imbalance here is inside the balanced price range, right? This imbalance here is inside this balanced price range, right? So we start consolidating right here. We stayed here. We came there, stayed there a month, and then we left, right? So now at the most, right, you're looking at this as your latest expansion leg of this bullish dealing range, right? This is your latest expansion leg. If you had an order block here, me personally, I always go to if there's an order block resting here, I go to the order block as my low, because that order block's job is to block price. And you can come back down to that opening price of that order block during high resistance liquidity runs. Okay, that's why I always include the order block when I'm measuring. That ain't no hard rule that Michael taught. That's just me with my experience of watching price. That's what I do. So this is our balanced price range. This is our latest expansion leg, right? On the monthly time frame, we have come to a discount. All right, we have come to a discount during the monthly for the monthly chart. Right, we came to a discount. When we got to a discount, we see discount sensitivity, right? Tim, we didn't come down into a PD array on the monthly time frame. N'est pas. I'm about to give y'all a little bit of game for those who don't know. First of all, right? What do we have over here? We have a wick. We have another wick. What are wicks? Wicks are gaps, right? Which one of these wicks did the most damage? This wick right here did the most damage. It reached higher than that, right? So we have a wick there. Uh-oh, come here. God dog it, get on there, man. Came down below consequent encroachment of that wick, discount sensitivity, down. Right. We also remember we came down into some weekly PD arrays there too. But on the monthly time frame, what are we trading it to? That wick right there. Right. But this is where it gets good for those who really don't know. If you go back into the throwback ICT vault, you will learn about an implied fair value gap. And what that is, you take the consequent encroachment of candle number 1. When you see the expansion on candle number 2, candle number 3 is going to tell you what to do. When candle number 3 trades down and gets an immediate rebalance, you take that magical fib tool and you map out the consequent encroachment of candle 3. And what you get between those consequent encroachments is an implied fair value gap. Yes, you do. So we trade down into the implied fair value gap, trade down into what we said. How far can you go below the gap? How far can you go below the liquidity, right? We came down to below consequent encroachment of the discount, the premium wick that was below price. And then what do we get? Discount sensitivity off of these monthly PD arrays right there. Nice closure. Nice discount sensitivity off the monthly PD arrays. These monthly PD arrays, their job is in line with the narrative on the monthly time frame, right? So if we're watching for them to do their job, where should it send price? Above that high right there. That buy side liquidity right there is where these PD arrays are designed to send price, right? And right now, this PD array is doing its job pretty well. It has not failed. Why? Because you haven't had a monthly closure below these PD arrays that's designed to send price back up. Matter of fact, you got extreme discount sensitivity off of these discount PD arrays. See where they're resting? They're resting in the discount of the latest expansion leg of this dealing range. Okay. Okay. Are we tracking? Are we tracking? Okay. Right. Still got some more stuff on it. Did I delete the wrong stuff? All right. Now on the weekly time frame. All right. So on the weekly time frame, remember down here, we're in the discount. We're seeing that discount sensitivity on the weekly, right? It's in the discount of our latest expansion. Where should it send us? Back up here, right? So these PD arrays are designed to send us back up here. That's why I said before, if you were watching this, if you trade fair value gaps, you're in it already. If you trade order blocks, you're in it already. If you trade OTE, you're in it already, right? Remember, we talked about that, right? We talked about that. Okay. So these here were left in the wait of this retracement of coming to the discount. These PD arrays, this PD array right here, it's designed to send us here, right? It's designed to send us here. Why? Because this was the first imbalance that was created before we came and got this change in the state delivery. So if this change in the state delivery is the true narrative of what this time frame wants to do, this inversion fair value gap should send us back here. That right there is where it's designed to send us. Okay. Its job is done when it gets down here. It can have a reaction off of it, right? But it doesn't mean that it's going to complete its mission. Okay. So that's what you got to be careful of, right? Because right now, this time frame is bullish. So this bearish PD array is going against the grain of this time frame. So if, just like somebody asked the other day, hey Tim, can we short off of that invert? Yeah, you can, but you want to short it to a certain point because you will be trading against the grain of what this time frame's narrative is. Okay. So now we have this right there. So what do we see on this weekly time frame right now? All right. What do we see on this weekly time frame right now? Are we showing premium sensitivity to this inversion fair value gap right now?
Not right now, we're not.
And why is that?
Because we have already crossed that equilibrium of that gap and closed above it.
Exactly. We've closed above.
We want to see that, yeah.
Consequent encroachment of this inversion fair value gap. Premium sensitivity, right, would be the closure should be below this. Why? Because we came down to a discount. We came down to a discount. Now, this is our premium PD rate. This is our premium bearish PD rate. When we trade back up here, right, you want to see a closure below this right here, right? If it rejects very far and closes outside that, the further the better. If it stop at 25% and get on back out of there with the closure, that's even better. That's it. Ow, I just touched something hot. Right now, we're not seeing I touched something hot, right? We've traded up and got a closure above consequent encroachment. So right now, right, it's still showing bullish order signatures of bullish order flow on the weekly time frame, right? Now, you're watching this here, okay? If this week, right, the first week of December, right, if we close above consequent encroachment of that wick, we're not showing premium sensitivity to that right there, right? But Tim, what does it mean if we do? Okay, we do. We do show premium sensitivity. What do we say? These PD arrays are designed to send us down here, right? Well, Tim, why down there? Because this right here is the breaking structure. That's the structure shift. This right here is just liquidity because we came to a discount and we trace back up. Right. So what is that right there? That's just short-term liquidity right there. That's a short-term low. Right. So if we hit that and came down and took that out, right, all we're doing is sweeping liquidity. We're not, you know what I'm saying, breaking structure on this time frame. Why? Because we're still in the discount of our range, right? This bullish dealing range right there, this still resides in the discount of that range. Okay. It's just a high resistance liquidity run instead of a low resistance. All right. You always want to know your invalidation points for your buy program and your sell program. Right. But right now, we're not showing any discount. Any premium sensitivity to this inversion fair value gap. Right. That's a bullish signature. Right. Well, Tim, are you saying price just going to run? You asked me how to see it in real time. I'm showing you in real time the stuff that you look at. Stop asking me for a crystal ball. Right. Okay. Daily time frame. All right. So on our daily time frame, I got a lot of junk on here. Get out of here. Get out of here. All right. This is the range when we was looking at like our EPTA. I haven't went back in and like adjusted any up the look backs, right? I'm still looking at, this is the 60-day look back that I'm looking at right here. This is our 60-day look back, right? I didn't adjust the 20 or the 40, right? I didn't adjust the 20 or the 40, the old 20-day look back. Let's see if that's still 20 days. Right, that's the high that I don't have the high turned on. All right, let's see if that's still 20 days. All right. From today. All right. Just short of 20 days. Right. It's like a day or two short of 20 days. So for the 20-day, if you want to get it like accurate, that's the highest swing high right there. And that's the lowest swing low for the 20-day back, because next swing high is there. And that's 20 days. And that's that candle there. Right. Right. So that's the most recent 20-day look back, for those that want to have it super accurate. And then our 40-day look back, this right here would be, and that's probably our lowest low right there. But let's check it. Yes, that's our lowest low there. All right. So now that's your 40-day range there. And then 60-day. $60 there. So for the 60-day that's there, it's outside of that range now. Let me see here. Right. So that right there was the 60-day low right there. So now this is our lowest low right now in the 60-day range there. I'm just going to leave mine there because that's where it was when I was watching it. I'm just going to leave mine there. All right. But if you want to adjust it to for right now, right, all I'm got so the 60 and 40-day got the same ranges. Right. That's your lowest low for 60 days back, highest high for 60 days back. Right. That's your lowest low and highest high. I'm leaving mine there because that's what I've been working off of. Right. And so I'm still working off of this range here. Right. This is the dealing range that I'm still working inside of. Right. So that's why I'm leaving mine there. I'm not moving mine. But if you want to do it like based off of, the accuracy, you're going into a new month, you know what I'm saying? All of that low there, that monthly low there at 23,904.50, that will be your lowest low. And then that high, that high right there, that October high would be your at 26,399 even. That will be your highest high and lowest low for 40 days back, 60 days back. And then 20 days back, this is your highest high right here at 25,830 even for 20 days back. And they all got the same lowest low. All right. If you want to do it like that. But for me, I'm leaving mine like this for the 60-day look back because that's the price range that we're still inside right there. All right. We've come back to a discount. Now we're coming back up, getting close to that upper quadrant there. All right. Okay. Okay. So for our daily, man, I ain't moved that weekly. Oh, this is my daily. I did move that weekly low. Yes, I did. It's my daily. All right. So for the daily time frame, and what that daily in a couple of days. Oh yeah, because I wasn't trading. I was off. All right. So this is that weird price action that we got between Thursday and Friday. Right. I had saw something about the market had halted or something like during the holidays. I wasn't watching the charts, but I saw something about the market had halted during the holidays or something. But this is that weird price action we got for the holiday trading, those weird holiday outs we was having on like Wednesday night, Thursday night, all of that right there. This is that right there. CME data center glitch. Okay. Right. So that's that price action. And looking at the daily SIBI, right? Are we getting discount sensitivity right now at this daily SIBI right here? Right? Are we getting discount sensitivity there? I mean, premium sensitivity. I'm sorry. Are we getting premium sensitivity there? All right. See, as we came up there on this day, we traded up to the lower quadrant, right? Traded back down. That's premium sensitivity right there. But then the next day, we opened up, traded down to the low of it. And then we came up and closed above consequent encroachment, right? So right now, no, we're not showing premium sensitivity at this bearish PD array right there, right? We closed above, right? This whole of the balanced price range right here. See this balanced price range right there? We closed above that balanced price range. If you're bearish and you're below a balanced price range, right? Let's mark them out here. This is where this area right here, where the BISI and the SIBI overlaps. All right. Where the BISI and the SIBI overlaps right there. That's your balanced price range right there. Right. We trade up there. We touch it there. Drop down. Right. Extreme sensitivity. That sensitivity there takes us all the way down. What to here. Then we came back and touched the SIBI. And then the sensitivity off of the SIBI takes us all the way down to there. Right. So that's premium sensitivity. When we trade back up this time, we touch it, barely move, a little bit sensitive, but barely move, right? The next time what we do, go and we close above the balanced price range and above consequent encroachment. That's not premium sensitivity, right? That's not bearish order flow right there. That's a bullish signature, right? Tim, is it going to keep going up? Oh my God, if you ask me that one more time, we're studying how to identify it in real time. All right. Okay. So that's our daily, right? That's our daily. We have internal sell, internal buy side here, right? Now looking here, we have our quadrants on that old 60-day look back, and that's also the quadrants for that dealing range, right? So now the reason why I'm watching this is not so much for the 60-day look back, it's for the quadrants of our latest dealing range, this bullish dealing range. So I'm watching this as a dealing range alone now, not as a look back and a dealing range. I'm watching it as a dealing range alone. Okay, so now I'm looking at the PD arrays that's forming around the quadrants of this dealing range, right? That's why I'm looking for my high probability PD arrays to form on the daily time frame around these quadrants here, right? That's what I'm watching for on this time frame. So now this right here, right? Look at it with me now. This SIBI, what SIBI is this in this move down here when we swept that liquidity? That's the first. So we trade back. If we once we trade back and offer this opening price right here, that opening price is 25,722 and a quarter. Once we offer that price, that is the change in the state delivery for that area there. We've already offered the change in the state delivery here. Once we offered 24,966 and 3/4, that was the change in the state delivery. Why? Because this down close candle here, one big down close candle came, took out liquidity, traded into an anticipatory reactionary point, and then it came back and offered the opening price of this bearish, this bullish order block. That was your change in the state delivery there, right? And then now, right, when we're coming back up here, we're looking at this entire move, right? That will be the change in the state delivery for this entire drop down into that sell side liquidity. This right here is the first imbalance that was created on this way down, right? So once we close back above 25,625 even, now we have an ICT inversion fair value gap, because it's a inversion fair value gap that's in line with the bullish narrative that's being shown on the higher time frame and this time frame here. Okay, and this time frame here, because we're inside, this is our dealing range right there, right? And we have a bearish fair value. We got a bearish fair value gap in the premium of the range. So if it's designed to be bearish, we should sell off of it, right? But we got a bearish fair value gap in the premium of the range in line with a quadrant level. If we get on top of it, boom, now it's an inversion fair value gap, because it's the first before taking liquidity and getting a change in the state of delivery. All right. Inversion fair value gap. Once we close above whatever I said that number was a few minutes ago. Okay. This is the stuff you walk through and you look at piece by piece, time frame by time frame, and you say, okay, if price does this, then it should do that. Are we in bullish order flow? Are we in bearish order flow? You know, the daily time frame is about as low I go on my chart prep. We see here now we got a BISI that's here, right? We got a BISI here. We're coming, right? We got our nice little V shape coming off of this low here, right? So all of it, all this back and forth there, you do not want to see price coming back down there. Why? All of this right here, that's just a balanced price range there. We got sell side delivery, we got buy side delivery, right? All of this right here, balanced price range right there, right? That breakaway gap, right? Acting as a breakaway gap. This one here right now, still acting as a breakaway gap, right? We're disrespecting this right here. You don't want to see price start to get very heavy right here, because we're respecting bullish order flow right now. Now, once you come to this upper quadrant, can price get heavy and come back down to equilibrium? Yes, it can. Right? It can. If it does that, it doesn't invalidate anything. Why is that? We have a bullish order block right there in line with a quadrant level, right? Where are you looking for your trading opportunities? In this area here, right? Inside this area there, that's where you're looking for the bulk of your trading opportunities. If price came back down to there, that's fine. You got a bullish order block in line with a quadrant level. If price chooses not to come back down there, it's fine. Why is that? Right? Because you're not seeing that premium sensitivity at a premium bearish PDU rate. If price wants to keep cutting through, what do we start do? We look for price to stair step back up the ladder. All right. Anybody? That's all I got. Anybody got anything for me while I put my lines on the proper count on the lower time frames? If not, once I do that, then we're gonna call it. Ah, come on. There you go. Then looking at price, what does price appear to be? What does price appear to be here? Where are we?
It looks like we're on a buy side of a model.
Yeah. Yeah, because we finished that market maker sell model, right? And then now we've come back up and got a break in market structure there, right? So smart money reversal, low risk buy, right? Take out that high, and then now, right? So on the short lower time frame, right? We completed a bump model there. That will complete a model there, right? As we work our way back up, right? Come back up there, and then that's the overall right up there at the high that we was talking about before, right? As you climb your way back out, from the smart money reversal right there at that lower quadrant of the dealing range, right? We've already completed this smaller market maker buy model, right? We got liquidity here that will complete that market maker buy model. Then we got liquidity there that will complete the overall market maker buy model there. So, and all of that is still showing signatures of bullish order flow. Right. Oh, I know what I forgot to do. See, these days where it'd be weird with the gap. Like the new week opening gap, this is where it'd be strange. All right, so our last trading day was Wednesday. This where the gap be like real strange with the holiday hours. I'm trying to get a headache because I ain't drunk no water in a while. Somebody said, what about the other fair value gap in the top quadrant? What time frame you looking at when you say the fair value gap in the top quadrant? What time frame you looking at? Okay, so this Wednesday. on the daily chart. All right, so that's when we closed on Wednesday. And then we had that weird little Thursday trading. And then that's when we open up. Let's see, Thursday night. Then we open up like we had like Thursday night. It was like just nights. Like it was like when this was Wednesday night. Right. So this was Wednesday night up until like Thursday. This was like Wednesday night up until Thursday afternoon here. Right there. So this was Wednesday night up until like Thursday afternoon. And then this right here was Thursday night. And then it ran into like some weird thing. Right. So Thursday, 6 p.m. 8, 9, 9:30. Okay. And then it opened back up at 8:30. So, all right. So this was like Thursday night. And then it halted. And then Friday morning, it opened up until like 1:15. Okay. So that's another little piece of price there. Okay. So it should have just been that and then this, but it was that, this, the halt, and then this, right? So price was kind of weird. So this right here is Wednesday's close. Now, this is the thing where, you know what I'm saying, in the past, Michael taught like watching different gaps, right? So from the Wednesday close up until where's 6 o'clock at? 6 open right there, right? So that right there is the gap from the Wednesday close up until now, right? And then over here somewhere, wherever this little close is, let me see, Sunday, then Friday, that little space right there. So, right, this is when it gets kind of sticky. So for me, I'm just looking at from when we closed on Wednesday to when we opened here. Because this was the last time real trading was going on. So that's what I'm personally using for my new week opening gap. Right. That's what I'm using for my new week opening gap there. That little range there. And that's the reason why. This was the last, it's a holiday. This was the last, that was the last price of actual real trading, right? This is all that holiday trading. And then that opening price right there was the next official trading day. So that's how I'm watching it right there. I'm watching how you choose to watch it. That's the reason behind why I'm watching it like that. And, you know, it is what it is. Okay. Okay. Appreciate y'all for hanging out with me. Oh, the daily time frame. Daily time frame. You said, what about the other fair value gap in the top quadrant. Talk about this Sibi right here. This Sibi right here. Long down candle top left. Talk about this Sibi right here from the November the 4th. Okay, tired of waiting. All right, man. That's it. That's all I got. Diamond members. We got pre-market analysis in the morning. Christopher is back to school tomorrow. I think, yeah, I think Thanksgiving break is over. So I might be a little bit, I don't expect nothing out of it. If we create an inversion fair value gap here, right? I'm not even concerned with that. I just want to see price push through that. If we create an inversion fair value gap here and use this as support right there, so we can create an inversion, use that as support. Now, I want to see us push through that, right? Why is that? Because we come here, right, and go there, right? Now, I want to see that become an inversion at that equilibrium and be used as support to take me up to the top. All right. So I got to take Chris to school in the morning. And so it might be the pre-market analysis may be a little after 9, right? But so for the pre-market analysis, Monday and Friday, guaranteed pre-market analysis. Wednesday is our tape reading, right? Tuesday and Thursday, I may or may not do it, depending on if I feel like trading that day, feel like if I want to sit down in front of the charts. So Monday, we're going to do pre-market analysis. It's going to be inside the pre-market analysis channel. Wednesday, of course, we do pre-market analysis because that's our tape reading day. Friday, we do pre-market analysis unless it's a holiday or unless I take off, right? Tuesday and Thursday, you know what I'm saying? If I feel like sitting in front of the charts, I'll do a pre-market analysis with you. If I don't feel like sitting in front of the charts, we won't do it. All right. So tomorrow, pre-market analysis at 9. Might be a little after 9 because I got to take Chris to school. If it's a little after 9, hey, it's a little after 9. Just be on the lookout for the bat signal to pop up in the pre-market analysis channel. Okay, nope. All hearts and minds are clear. We're gonna go ahead and call it there. If this was your first time tuning in to Tim's Tidbits, you probably ain't here no more because we done been on here for a really long time. How long we been on here? Forever. We started at 5 o'clock. It's 6:46. Y'all late. Almost 2 hours. That's why I'm trying to get a headache right now. I've been talking straight. I ain't ate nothing. I ain't drank nothing except that little sip I just took. I was just looking to see if I saw anything in the chat. Don't see nothing in the chat. Appreciate y'all, man, for tapping into Tim's Tidbits, man. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Tim Lee Rod Sr., a.k.a. Aranya Grande. That just means big spot if you don't hablo español. Y'all be safe out here in these trade streets, man. Gone.